I am getting a lot of questions about the current mortgage interest rates. Is it high, low, or what? And if they're going to be staying put, go up, go down, or what have you in the next year. And I made this video to help answer all those questions. And now you stick until the very end, wherein I show the mortgage rate projections from leading providers about what it's going to look like into the next year. Hey, before we get all in, Ravi with the Rams Group at eXp Realty here. If this is the first time you're visiting my channel, I welcome you. And here I strive to provide meaningful, relevant, and educational content to help both home sellers and buyers. And you hitting that subscribe button, smashing that bell icon, and liking this video will not only help the algorithm, but help others also derive total value from this video. And I totally appreciate it. Okay? Getting into the meat and potatoes, probably one of the biggest updates or topics that you may be curious about is what's going to happen to the interest rates? Where are they headed? Now, let me give it to you. Are you ready? The overall outlook is that they're going to rise. Before delving into the details, some history should provide perspective. Let us start from January of 2020, the last year, prior to the pandemic. The interest rates were about 3.7%, and right now, the average 30-year fixed is at 3.1%. Now, many say that rates will rise next year, and I'll show you what the forecasters are saying. However, if you were to ask me what's going to happen with the interest rates, I think we are going to go back to where we were. This is the historical perspective on interest rates. Looking at 2016, 17, 18, and 19, I'm going to call them normal years in real estate, and was balanced somewhere between 3.5% to 5%. And I think we are heading back into a much more normal interest rate environment. We've seen some phenomenal interest rates over the past year. No kidding, right? And I think we are going to head back into a time where we were prior to the pandemic. I often get asked, what's the impact of rising interest rates on home prices, home sales, etc.? Now, if the rates are going to rise, does it mean that we're not going to sell as many homes? A great question. I commend the questioner back. And I also offer this perspective. First, home prices are slightly impacted by rising mortgage rates. Going all the way back to 2000, what you see in this graph here is that the interest rate, and what you see in the bar graph is the appreciation or depreciation. The quick thing I wanted to point out in each rising interest rate environment is that there's no depreciation except during the housing crisis years. When you look at the rising interest rate environment, the first one around 2005, there was less appreciation in 2006. Then you look at 2012, 13, and 14, the rising interest rate environment did cause appreciation from 2012 to 13, and then there was less appreciation in 2014. And even though interest rates were on the rise, the next one is in 16, 17, and 18, we go up and come back down a little bit. So a slight impact in the home price appreciation. Now, price appreciation though, as we can see, is resistant to the rising mortgage rates. And here's why. As Mark Fleming, the chief economist of First American, said, home price appreciation is resistant to the rising mortgage rates, primarily because most sellers would rather withdraw from the market than sell at low prices. A phenomenon we refer to as the downside sticky. So somebody is going to say, okay, if I can't get as much money for my home, or if my home is not appreciating as fast, I'll take it off the market. That's what Mark is telling here. The other question I get is, are home sales impacted by the rising interest rates? Well, if you go back all the way back, which is what you see in this graphic, where we have interest rates in the line graph and the home sales in the bar graph. As we can see, home sales aren't impacted by the rising mortgage rates. On the chart, each one of the red bars being rising interest rate environments, and they are not corresponding with the lower home sales. So the key takeaway here is that home sales and the home prices are all dependent more on the available home supply, also known as inventory, and the buyer demand, more than having a direct dependency on the interest rates. Sure, how much home one can afford is going to be dependent on the interest rates, however, not the number of homes sold. I think overall, we can expect a rising interest rate environment going into the next year. I don't see that affecting the housing market dramatically. Thank you for sticking around this long, and here's what I promised in the beginning of the video, the interest rate projections. This is an outlook from 4 leading providers, Fannie, Freddie, MBA, and NAR. What they're saying is that sometime between the middle and the end of next year, they are forecasting between a 3.5% to a 4% for a 30-year fixed. So it's going to cost you more. I'm not here today with a crystal ball trying to even fathom what the interest rates exactly are going to be by any stretch of imagination. But I am here to tell you that you can expect a rising interest rate environment. So that's how the market and the interest rates are going to play out in the next year. Hope this video was insightful. Let me know in your comments in the section below about what you feel about the interest rates in general, any surprises, aha moments after watching this video. Now, to help you, I've also included the affordability calculator in the description below, where you can plug in the numbers and see how the rising interest rates will impact your monthly payments for homes at the price point you are looking to buy. Also included is my contact information below for us to connect. I am super excited to brainstorm and get you the answers to your questions so that you are more informed. Would you let me know? I'll talk to you soon. Bye-bye.